Hi, I'm Brian Rezny, President of Rezny Wealth Management and host of the Rezny Wealth Report. We've got a great show for you this morning. Of course, if you have questions about your portfolio, any investment, or the advice you're receiving, send them to Brian Rezny at ReznyWealth.com. And make sure you do visit our website, ReznyWealth.com. Sign up for instant email alerts about investment topics, or download any of our reports about retirement income, protecting your wealth in retirement, and making sure you're really getting quality advice from a real advisor and not sold the proverbial bag of junk. You know, today's topic is about real advice, or are you being sold? Sad fact, the majority of investors really are being sold a lot of junk from Wall Street firms, banks, and annuity charlatans, as we call them. I've been managing money for 30 years, and I'm going to uncover today some of the areas of concern that you, the investor, should have concerns with. I want to educate you so you can make better decisions about who you entrust your money, and so that you get the best advice possible and you're not sold anymore. Sad fact, the majority of investors get sold the proverbial bag of junk by fake advisors, salespeople, under the suitability standard, who work for Wall Street firms, banks, and insurance companies, and don't realize it until it's too late. I've talked about this for years, and unfortunately, I see a lot of carnage all the time. Too often, too many investors get hurt by these fake advisors, these salespeople who work under what's called suitability. You, the investor, need to educate yourself about fiduciary standard versus suitability, and hopefully today's show is going to do just that. Suitability versus a fiduciary standard. Suitability, selling you what you're suitable to buy. We estimate 90% of so-called advisors are working under what's called the suitability standard. I'll give you a quick explanation of suitability. You show up to the local coffee shop. You want a nice hot cup of coffee. So basically, you go up to the window. They tell you it's $4 for a cup of coffee, and you're kind of set back. $4 for a cup of coffee? That seems kind of expensive. But anyway, you give them the $4. They hand you a cup, and they basically spill it on the way, and you notice it's only half filled, and it's lukewarm at best, and it's clearly not fresh coffee. It may have been sitting around for 3 days. That's suitability. Suitability means they can sell you things you're suitable to buy. So if you want to buy a cup of coffee, it doesn't have to be the best cup of coffee, the freshest cup of coffee. It just has to be a cup of coffee. And also that cup of coffee could be 3 or 4 times more costly than what a good cup of coffee would cost you. Under a fiduciary standard, a fiduciary advisor or firm legally works for you and has to work in your legal best interest. We estimate that's about 10% of firms nationally. By the way, no Wall Street firm, no bank, and no insurance company or insurance broker is a fee-only fiduciary. None of them. So basically, under the fiduciary guidelines, you go to that same window, but now the cup of coffee only costs 99 cents. You're pretty happy with that. You hand $1, you get a penny back. They hand you a nice hot cup of coffee, piping hot, clearly freshly out of the brewer 30 seconds ago. It comes in a nice china cup. That's fiduciary. It's legally in your best interest. Yes, you want a cup of coffee, but it's got to be piping hot, fresh, a good value for you, the consumer. Unfortunately, investors do not understand the difference between a suitability standard and the fiduciary standard, and because of that lack of understanding, it hurts your portfolio and your money. The vast majority of investors really don't understand the difference. It's a vital difference between these two standards. Ask yourself this: do you truly understand fiduciary standard, suitability standard, and do you really know if your advisor is a fee-only fiduciary money manager, or are you really working with a Wall Street firm that's using a fake title of wealth manager, financial advisor, and basically selling you a bunch of junk? Sad fact, Many of these fake advisors will actually lie to you and tell you that they're a fiduciary when they're not. My recommendation, anytime you entrust a firm with your money, have them on their letterhead write that they are a fee-only fiduciary money management firm. Have them sign it on the letterhead. That way it's in writing. Don't let them tell it to you. You want it in writing so these firms cannot lie to you and essentially rip you off by selling you bad investments. In our estimation, the vast majority of investors, that's you, lose 2/3 of their investment returns or portfolio value by the time they're 65 by being sold by fake advisors, Wall Street brokers, banks, and annuity charlatans under suitability. Give you an example. You're 35. The average person at 35 starts to make enough and save enough, so by the time they're 65, they have a nice nest egg. What we're saying is, based upon our research and our calculations, you, the average investor, has 2/3 less investment net worth by the time you're 65. So instead of having $3 million, you only have $1 million. Instead of having $1.5 million, you only have $500,000. You have 2/3 less investment net worth. Two reasons: emotional investment decision making and being sold bad investments that are overpriced, crummy, under the suitability standard. That's a sad statistic, a sad fact, and unfortunately, too many investors are harmed by these firms every single day. Roy from Naples, Florida. My advisor is suggesting I take my pension as a lump sum and then use it to buy an annuity from several different insurance companies to spread the risk. Do you agree with that? Roy, no, absolutely not. If you have a pension, you have two choices. One is, yes, you could take it out of there as a lump sum, but rolling that into a bunch of different annuities, this person clearly works under suitability. They are trying to make the biggest commission for themselves, and they're actually putting your money at risk. Your money in your pension actually is guaranteed, and you actually might get an inflation factor if you leave it as a pension. By doing the annuity, you're not going to get that overall really guarantee, and you're certainly not going to get that inflation protection. This person is trying to give you a sales pitch to sell you a bunch of different annuities for the biggest commission for themselves. To me, that would be a blatant mistake, and it would really harm your retirement long term. As I talked earlier in my show, fiduciary standard, suitability standard. Anyone who sells or tries to sell you an annuity for commission is working under suitability. By the way, under suitability, that person works for the insurance company they're selling the insurance policy or investment product for. They do not legally work for you, and under suitability, they don't have to give you the best advice, and in fact, they're not giving you any advice. They're really a broker, and they're selling you. Do you want to be sold, or do you want your money properly managed in the legal best interest for you? Unfortunately, that question that Roy had comes up far too often in our practice. We see retirees and pre-retirees all the time through Southwest Florida that come into our offices. We've seen the carnage. We've seen the annuity charlatans of the world come in and basically take advantage of these people and blatantly lie about the returns, free money bonuses, about these products. If you do not do your own research under suitability, you are almost the only one to blame for that bad advice. Harsh words again, but again, we're trying to protect you and educate you through our shows. If you have questions about your portfolio, send them to Brian Rezny at ReznyWealth.com. We're going to take a quick break. Visit our website, ReznyWealth.com. Again, if you're concerned about the portfolio advice you're getting or maybe the lack of advice, if some of the information that I've discussed so far on this show is starting to alarm you and you're realizing your advisor is no more than a salesperson, you're looking for real money management, real advice from a fiduciary, visit ReznyWealth.com. Call us for a consultation. Let's talk about your portfolio. Let's make sure that your portfolio is well aligned with your goals right here in Southwest Florida at one of our offices, whether it's Fort Myers or Naples. I'll be right back. Hello, I'm Brian Rezny, president of Rezny Wealth Management. Is your so-called advisor really just an annuity salesman? Fact. Annuities are sold by misleading you, the investor. Sky-high expenses, crazy surrender penalties, and mediocre investments rob your returns and rob your security. My advice, stop being sold. If you want real money management, real advice, call my firm today. And we're back, and of course, your questions to Brian Rezny at ReznyWealth.com. Any investment questions, whether somebody sold you maybe a mutual fund or a stock or a bond, maybe the advice you're receiving doesn't seem like it's really working, send us your questions. Let us answer those on our show. And as always, visit our website, ReznyWealth.com. Call us for a consultation. You know, before I go to my next question, I want to tell you a little story. It's a very sad story, and I want to tell you this story, these types of stories, I see them weekly, by the way. People that will listen to my radio or my TV show, they'll call us to come in for a consultation. Some of these people we can help, others we can't because their portfolios were so damaged by these so-called advisors. But sad story, and this is one that we could actually help. A couple in their 70s happened to be listening to one of my TV shows, and because of the education that we provide Southwest Florida, they learned something that was already disturbing them, but we educated them so it really brought up the alarm to a higher level. They called my office. It turns out they were working with a so-called advisor. This guy was really a broker with a Wall Street firm that sold annuities in addition to non-traded REITs and other junk that I try to warn investors about all the time. Well, what happened was because they listened to our show about annuities, they realized something wasn't right with their portfolio. They were sold about 5 or 6 different equity index annuities, and these are like the garbage of the garbage. And this was about 3 years ago. Well, this broker, so-called advisor, had them come back into their office to have them liquidate, which they really didn't know what was going on, by the way. He didn't really explain it to them. Liquidate 2 annuities that incurred a $27,000 surrender penalty to these couple. And what then happened is he put them into what he called a better annuity, better for him and his commission, and basically really didn't explain this to the clients and the surrender penalties and everything. The bottom line is these people hired my firm. We're now there helping pick up the pieces, and we made sure that they now understand really what's going on. Folks, don't take it for granted that the person you're working with is a feeling fiduciary. This couple took it for granted until they listened to my show and became educated. They came in. We are now helping them. What's the sad fact is this person has probably done this to lots of other retirees or pre-retirees throughout Florida. Your so-called advisor may have done this to you. Annuities are toxic to your portfolio. They're great commission generators for the so-called advisor. But the sad fact is about half of the people that come into our offices right here in Southwest Florida have been sold 1 to 4 annuities, and I'm yet to see somebody that's happy with them. Once they're into these things for 2 or 3 or 4 years, they start to realize how bad they perform, how expensive they are, and all the propaganda lies they were told by the annuity salesperson really were not factual. Things like 8% returns, not going to happen. Things like free money bonuses, you actually pay for that as an expense ratio. There's no free money. So when you start to hear things like surrender penalties and things of that nature or free money bonuses, it really should alert you, the investor, that the person you're entrusting your money to is really a salesman and he or she does not have your best interests at heart. Rich in Fort Myers, Florida. How does one pick an advisor? I've heard your show on and off, and I had 4 different advisors in 20 years, and none have really helped me. My current advisor wants me to move my IRA into an equity index annuity. Your thoughts? Rich, the problem is you're not hiring a real advisor. Chances are you've hired fake advisors the last 20 years, and I will tell you, you're no different than the vast majority of people that hire my firm. The vast majority of our new clients come from so-called advisory firms, Wall Street firms, banks, and these annuity salespeople. If the firm is not fee-only, and by the way, fee-based is not fee-only. You want a fee-only fiduciary money manager. if you're not hiring the right person, you're not going to get what you actually want. If your house is on fire, you call 911, the fire department shows up. If you call 944, an arson shows up with a gas can, he's going to make your house burn even faster. So you either got a choice, call the fire department or call somebody who's going to throw gas on your house. So under suitability, the problem is you've never had a real advisor, you had a salesperson. That's the crux of the problem. Nobody wants to educate you about this, it seems, other than my show. Wall Street firms don't want you to know they work mainly under suitability. Banks don't want you to know when you go in there to do your deposit and they shuffle you off to the bank rep in the corner of the bank building that he's working under suitability. The guy who's selling annuities calls himself an advisor. He's an annuity salesman. He doesn't legally work for you. Red flags you should watch out for. And again, anytime you go to hire someone, or if they're giving you the pitch, and let me jump back just a second here. When you walk into somebody's office and all they do to try to sell you is an annuity, you better run real quick. Red flags to watch for. They just want to sell you an annuity. That is the biggest warning sign of all. I can tell you, I get this propaganda in my mailbox all the time about going to a free steak dinner, and all it is retirees get in a room, they give you a free steak dinner, and then they try to sell you an annuity that you don't understand, and then about 2 years down the road, you're sad you bought it. They just want to sell you a non-traded real estate trust investment. Those are the two big commission generators for Wall Street firms, banks, and often these annuity people are non-traded REITs and annuities. They won't tell you what they're selling is going to cost you anything. They won't tell you really what it costs. That's a problem. Anybody that says it won't cost anything, I'm sorry, folks, nothing is free. There's not one product out there that doesn't have some kind of an expense ratio or management fee. If they tell you it doesn't cost anything or it's not going to cost you anything, another big red flag. They give you the runaround when you ask questions and want details about the product or the cost. I would estimate the majority of people selling a lot of these investment products for the highest commission probably really don't understand how they work themselves, so how are they going to answer your questions? But you should ask questions, because you asking questions is going to get a little bit of information so you can decide real advisor or the sales job. The investments they sell have surrender penalties or are not liquid. You as an investor should never be bamboozled into buying an investment that has a back-end surrender penalty. There is no reason. If the investment was so good, you would never want to leave, so why put you in a surrender penalty at 12 or 14% for 15 years? It doesn't make sense. No liquidity, surrender penalties, run the other way. If the firm is not a fee-only fiduciary registered investment advisor, you should run the other direction. If they tell you they're a fiduciary, have them put it in writing on their letterhead. I am a fee-only fiduciary money manager. Have them sign it. Keep that piece of paper. If they won't do that, you found out that that person's lying and they are a salesperson trying to take advantage of you and your hard-earned money. Sam from Cape Coral, Florida. Bitcoin as an investment, a bubble or an opportunity? Sam, Bitcoin to me is a huge bubble. If you remember the year 2000 in technology stocks, and what was interesting, if you look at the general market really didn't go up a lot. What really went up is a lot of these crazy technology stocks that went up a lot and then crashed and burned, and investors lost a lot of money. I'm starting to get more and more questions about Bitcoin, and it has raced up a lot in value. When I start getting a lot of calls, that tells me a bubble is now forming. And what you have to realize, a bubble is going to pop eventually, and there's a high probability that you're going to lose some or maybe all of your money. I've seen carnage all the time. Most investors want to invest in what was hot, meaning whatever made the most money from the year before, or they heard about the one that made the most, they want to sell the one that they had that didn't make as much and plow more money into something that's overvalued. Remember, anything that everybody starts talking about, that is overvalued. And if you really don't understand what Bitcoin is, and most people don't, it's probably not something you want to invest your hard-earned life savings. Otherwise, you'll probably lose a lot of it or some of it, and you're not going to be a happy investor. I'm going to take a break. Go to my website, reznywealth.com. If you're concerned about the advice you're receiving, we have our offices right here in Southwest Florida, right here in Fort Myers, right here in Naples. Call our number on the bottom of the screen, schedule a consultation, get a second opinion, make sure you're doing the right things for your money. Don't be sold by Wall Street firms, banks, and the annuity charlatans of the world. Do what's right for your portfolio and your financial security. I'll be right back after this. Hello, I'm Brian Rezny, president of Rezny Wealth Management. Is your broker working in your best interests, or are you being sold inferior investments by Wall Street firms and annuity salespeople? My advice, never settle for bad advice if you value your financial and retirement security. Real money management, real advice is the difference my firm provides. Call us today and schedule a consultation. And we're back. I hope you're enjoying today's program. Of course, if you have questions about your portfolio, send them to Brian Rezny at reznywealth.com. And make sure you visit our website. Again, sign up for any of our instant email alerts, any of our free reports for the download, retirement security, income, retirement planning, why annuities are dangerous to your wealth and retirement. Any of our reports are on our website. Go there, download them, learn a little bit. And again, a little education goes a long way. Make sure you truly understand who you entrust your money to so you are not taken advantage of by fake advisors, these so-called advisors, people working under suitability who could care less about you and more about the commissions they generate. Jim from Naples, Florida. Will tax reform boost economic growth? Jim, that is an excellent question. What's interesting is after our new president, Trump obviously was in almost for a full year now, the economy itself is already doing better because of deregulation, which is really, he's a one-man band on this thing, really working by himself, getting rid of all these rules and regulations, and we're seeing the economy start to pick up a little bit of speed. Tax reform, I firmly believe tax reform will help. Remember, our corporate tax rate in the U.S. is the most uncompetitive really in the world. That hurts the U.S. Businesses, large and small alike. By reducing the corporate tax, it should help spur economic growth. If you reduce taxes to the middle class or people in general in the U.S., they have more money in their pockets to spend in a more favorable way versus being really blown by the U.S. government. I firmly believe that the economy is on fairly stable footing and we're on this fairly decent glide path up. Could we hit 3% average growth GDP rate in 2018 for the full year? I think that's realistic. It might be able to do a little bit better than that. And I think if you got the Democrats and the Republicans to actually work together a little bit with our current president for some even better policies, I think our economy could easily grow better than 3%, maybe better than 4% long term. I don't really plan on seeing those two parties getting together and working together. They've done a bad job for decades, but who knows? Maybe they'll surprise us. But tax relief is going to help. Rules and regulations reduction is really going to help. And what you're starting to see, at least what I see in my personal business and business owners that I know or manage money for, they're starting to feel that the shackles have been taken off, that they've been held back the last 8 or 10 years, but now they're being released and they're willing to now actually spend money to promote their business, grow their business, and hire more employees. That's great for the overall economy, and I think we can really thank our new president working hard for all people in America. Ted from Boca Raton, Florida. My advisor only invests in U.S.-based large-cap stocks. I think I'm losing out on other opportunities. Your thought. Ted, you are losing out on those opportunities. Let me explain. Rezny Wealth Management looks at all asset categories, whether it's large cap, small cap, emerging markets, gold, currencies, all kinds of different asset categories. We don't just look at large cap U.S. stocks. There are a lot of firms out there, though, that's all they do, large cap U.S. stocks. The problem with that is those are not the best places to invest going forward. And actually, if I look at the overall marketplace, the most overvalued stocks or category are a lot of the large cap stocks, primarily in the U.S. I think there's much better opportunities outside the U.S., things like the emerging market economies, developed Europe, which we haven't been invested in for years, but we're invested in some of those now. Of course, our positions can change any time, but I will tell you, we seek out areas that have growth opportunity, a catalyst to grow, and we look for opportunities that have a cheaper valuation. And if, again, I look at the U.S. marketplace, large cap is one of the areas that is grossly overvalued, in my opinion. I would be looking at trimming that exposure, and I think you are missing out on great opportunity. What I would suggest, Ted, why don't you call my office, schedule a consultation, find out how a multi-dimensional approach to money management works, how we encompass all asset categories when needed and when necessary, and maybe we can provide and shed a little light on more opportunities for your portfolio. Mitch from Naples, Florida. Do you think we will have a stock market crash? Mitch, I don't look for a stock market crash. What I look for is a possible recession down the road. It may happen in 2018. It might happen in 2020. Who knows? What you need to do is you need to do your daily research on risk. I will tell you, most firms do not manage the risk in a portfolio. They buy and hold. We do daily research on recessions. That's your big risk, where you're going to get a big downturn in the overall markets and the investment sectors in general. If you're doing that and you can manage and mitigate some of the risk, which I firmly believe investors who do research look for overheated markets, trim their equity exposure, hedge some of their portfolio, whether with gold, cash, or maybe inverse ETFs, has a better opportunity than people who just buy and hold. But I will tell you, most of these Wall Street firms and the banks where we get a lot of our new clients from are buy and hold investors. They asset allocate all over the place, and they let it set it and forget it. Folks, I am just about out of time. As I've talked a lot in this show, really trying to educate you, visit our website. Results, retirement security, peace of mind. Experience the Rezny Wealth Management difference. My advice, never settle. Get a second opinion. Call us today. Schedule a consultation right here in Florida, Naples, Fort Myers, 800-618-8577. Visit ReznyWealth.com. I'll see you next week.